Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Greetings, Algo artisans. It is Tuesday, the 21st at 8:30 a.m. EST, and we are here at the Algo Factory Live Lab. Before we get started, please take a look in the description. There is a free algo. It's a very short video where I build an algo before your very eyes, and I show you the tools traders use to connect that algo to their broker so it can trade for them while they're not sitting at the computer. Of course, you do have to optimize the algo before you do that. We teach you how to optimize it at Algo Factory. If you want to do the agentic AI trading bots, the algorithm is the heart and soul of that bot. You cannot do a trading bot without an algo. Come check it out. Also like and subscribe, all that jazz. We're looking at the NASDAQ here, and you can see last week's prediction was pretty darn accurate. It definitely moved down very heavy last week. As a matter of fact, you can see the NASDAQ, especially starting Wednesday, right before the European Open, it just really started to just grind down all the way through Friday. It was nothing but a move down through Friday. And we looked into this, and I believe I put an update in the Algo Factory chat. This was a hedge funds protecting profits. This was according to a Goldman Prime book. So basically, hedge funds protecting profits, and the retail was buying the dip. Okay, so my conclusion is that retail has been sufficiently conditioned to buy every dip, which is a very dangerous time for retail. Okay, we'll get into what that means, but just take a look at the broader trend here. Okay, great prediction last week. I'm going to go ahead and get rid of it. There's a massive win. This was a 4.6-1 win. I got out a little bit earlier than this. I think I got out at like maybe 3-1, and it just kept going in my direction. But the original prediction was a massive win. 4.66-1 means that you put in, say, $1,000 and you pulled out $4,660, or maybe you put in $100 and you pulled out $460. So that's a big, big win. So congratulations to me, because we don't give investment advice and we don't tell you where to trade. If we did that, we would say congratulations to you, but we do not have that licensure, right? We just give you what we're doing. I say, hey, I'm going to take this trade, and I give you my trade ideas. All right. So moving on, I'm going to go ahead and zoom out a bit. We're going to take a look at the NASDAQ from a much higher time frame so we can get a feel for what's really going on with this, because this is really key. This is very, very important. Okay, I'm going to delete all this gobbledygook, and we're just going to look at this actually on a different screen. So I'm going to go back to the screen and undelete the gobbledygook because I want that gobbledygook. And I will look at the NASDAQ in a much higher time frame here. Okay, so the way this tends to work, and this is really, really simple, right? I'm going to draw the way this works up high. You have runs and flats. A run is a big move, and a flat is like kind of a slower move. So if I were to draw a run and a flat, it would really look like this: a strong run, and then kind of this weird, not weird, but just a choppy move backwards, and then a strong run, and then a choppy move backwards, okay? That's what they really look like, okay? But for the purposes of this structural discussion, why is that going on? We will just draw it like this, right? So these moves down are actually choppy, but this is just the price action. If we draw a line at these peaks right here and here and even here, I'm going to change this. I'm going to code that yellow. We actually will notice that it doesn't always happen like this, but it's very common for price to pull back to the prior high. So you have this high that happened right here. Price goes up and then pulls back to that prior high, gathers some liquidity, and then goes up. Now, sometimes it might go a little bit deeper. Sometimes it doesn't quite make it there, but usually it makes it there, or it goes deeper. It could go a little deeper than that. That's a lot of times how price action works, right? In a very simplistic, reductionist way of explaining it. Well, if you take a look at the NASDAQ, this holds. Okay, so we're going to back out here. This is the weekly chart. We're going back to like 2015 here, right? So if you look here, each time the NASDAQ pulls back in a major way, it bounces at a prior high or below it, right? You did have the 2020 crash here. That was a bit of a panic. But you have this move here, just like this. right? And if you mark these highs, you will notice, in fact, it even goes further back than this. You can go like that too, right? And there are exceptions to this, but you'll notice that here, the NASDAQ made a high, pulled back, pulled up, stopped at the prior high, right? Here you'll notice the NASDAQ made a high, pulled back, moved up, stopped at that prior high, right? Well, is that going to happen this time? Because if it did, we would be looking at a move down eventually to, well, actually, it did it again, arguably, right? This really was the high like right here. It pulled back to this level, right? So we can mark this high on a little bit closer of a time frame, pulled back, moved up, bounced to that high, kept going. Reasonably, the current pullback, if this pattern were to continue, and it usually does, it's not always the case, reasonably, it would pull back to the October highs, which is 26,689 or whatever, 690 basically. So these are the, if we were to be precise about it, 26,500, and that's October 2025. So that is a pullback that probably would look something like this and take us into September, maybe October. These pullbacks tend to take time. So this could really sort of chop around and then start to grind down and take us towards the next midterm election, okay, which is early November, right about there, roughly, okay? So, mind you, this could bounce at any time before that. If it pulls back deeper, it still could pull back deeper and bounce up. We talked about that. It doesn't have to be perfect. But you can see this happen. This is quite possible. And there are a lot of other articles saying that the NASDAQ could sell off and so on and so forth. Now, the market's in an interesting position because there are some similarities that we're starting to see between the current landscape, if you will, and 2008. Yeah, I had to move my my machine there. Give me 1 second to position here. I kind of got started in a hurry today. Move around a little bit. All right. Good. So that said, in 2008, what happened? Let's take a look. Let's go back, if the NASDAQ, if this particular chart allows us to that period, to 2008. Big pullback. So I think the NASDAQ was new. The tech sector is new, and we had a big, massive move. But the pullback in 2008, we could look at the Dow and other stuff too, was massive. It was a big move at the time. The NASDAQ it topped out at 2265, and it made its way down to 1,000. That's like a 60% move down. And I think it would have moved down further. I think it would have gone down about 80%, maybe 85%. But it was held at 55, and they did TARP, and they, pulled out $1 trillion, probably multiples of that, and kept pushing it up. Okay. So with that said, we're looking at just, money being pumped into the economy. This continues to go up, right? So arguably, we're looking at a possible, I don't know what's going on with my mouse, by the way, apologies there. It's hard to say where this would go down if there was a major crash. Okay, so now major crashes tend to be about 80%. So if we moved down 80% from the high, maybe 85%, that would be insane. That markets naturally on a big crash want to move that far. And you're talking about just to move down to really the listing highs, or whatever the highs are for this chart, it would move down that far. That could happen. It could happen. I think that at this point, it would be. I think we'll see a lot of sideways rather than that. If we do see a major issue with the economy, if we see a major issue with the debt markets, if we see a major issue with who knows what, I think we would not see that. I mean, I don't think they would allow it. I think they would just print money ad infinitum. But we could see a pretty strong sell-off to these lows. The what is this? The December of 2021 highs prior to the Ukraine conflict starting. We could see that, but that's very high time frame. What we like at Algo Factory is volatility, right? We like volatility. We like price to be moving in a given direction on a lower time frame, and there's lots of money to be made. So for now, the bias is bearish. Okay, and if I go back to my original chart, this was built last week for the. Why is this acting strange? I don't know what's going on with my mouse, but it's acting very odd. I would be. Let me zoom in a bit. Start to look at the metrics. I would definitely be looking at. Let's go down to the daily. Okay. If I do a market update, I will expand on this a bit, but there's a good chance what we see is basically a grind upwards, kind of like this, maybe. And 29,300 is a low of the prior sort of move here, right? So this consolidation that occurred, the bottom of this M-shaped pattern, it may want to bounce off that and head down. So it's very, very good probability we'll see some more blood there, right? So that's probably what we're going to see, but I'll do a stronger assessment if I can get that market report out later, but I'll leave this on for now. And the close is at here for this chart, okay? So that's what we're looking at. And we are just about out of time for the public live lab. I'm going to flip over to the private live lab. I wanted to spend some time on this because here's the deal. If you're trading Bitcoin, if you're trading silver, if you're trading anything, if you're holding anything, if the NASDAQ or the SP 500 or the Dow, which I've just flashed on the screen, if those fall, everything falls, right? That's how that works. Because everything's debt related. We have an issue with private credit right now. And we also have a certain gorilla who's joined the stage. Vita Gorilla, how you doing, sir?
I'm not a certain gorilla. I am the Optimus Primate. Yes.
The Optimus Primate has joined us just in time to maybe give us some thoughts on the broader market. And then we're going to hop over to the private live lab. What I'm kind of telling people is that the entire market is delicate, and we're probably going to see kind of a slow grind pullback until just before the election. And then whatever happens there, it could be anything. We could see it pop right back up. We could see it really fall pretty hard. It's actually kind of hard to understand what's going to happen. But in the next few months, I do expect kind of a sideways to bearish bias. So what do you think?
No, I agree with you. And I think, when I was coming on, I heard you mention, private credit. Private credit is the next big subprime. It's a ticking time bomb ready to blow, and they got to figure out some way to offload it. And what better way to blend it in with some bonds is what they're trying to do. So retirement is getting exposure to all sorts of AI stocks that are just, fantasy vaporware. And then the toxicity of the private credit market is being leveraged out into within the bond market. So this is going to end well. This is definitely going to end well. I we can all see the handwriting on the wall, Cowboy.
Yeah, for sure. I mean, we're seeing a lot happen in a lot of different places. And so there's a rude saying that my dad uses. I'll translate it. The flatulence occurs before the pants are soiled. And right now we're getting the flatulence. You got all these weird things happening around the world, and I think they're more a symptom than a cause of the market volatility. Iran and everything else. I think everybody knows that the current economic system is on its last legs or near being on its last legs, and so everybody's kind of fighting to get what they can. And you have very high level politicians, the highest in the world, like the president, just being very extractive, openly taking billions of dollars by doing a crypto SHIT coin. You have all this strange behavior.
How dare you? That is one of the greatest token coins ever created.
Yeah, we'll see.
It
You never
solves
know.
world hunger. Did you not know that?
Well, hey man, when you got the right friends, maybe they will make that coin important one day. So they're also doing what they used to do now, and they're mixing these assets, these cruddy, like very overvalued assets, with insurance contracts. So they're insuring against the risk, and then they're blending it into the bond market, as you alluded to. So this is literally a replay of 2008. They're putting a facelift on bad assets and selling it to retail. So we talked about this, but if you back out and you take a look at what's happening here with the NASDAQ, this move up, and again, I put this out in the weekly newsletter yesterday, and I've talked about it now for a month. This move up was almost a Sigma 4 event, going from Monday the 30th of March, roughly, until that NASDAQ top, which was in June. So what is that? April, May, 2 months. That move up in 2 months, I did the math. This is almost a 4 Sigma event, which means that even at a 3 Sigma event, that's a 0.2% chance of happening. That is not a 2% chance of happening. That is a 0.2% chance of happening. The fact that that moved as quickly as it did over that 2-month period is a very low probability. And on top of that, if you zoom in and you take a look, what was the date? It was like June 5th, I think it was. The panic that kind of happened where the market went down like several percent in 10 minutes or something, that 1 day's worth of price action back on the 5th of June right here, this Friday, I'll point to it here, this move, that was also almost a 4 Sigma event. It was like a 3.8 Sigma event, meaning that the probability was 0.2%. Now, what does that mean? In markets, when you have a 4 Sigma event, that means something broke. And this was a red hair away from being a 4 Sigma event. So that right there shows you that things are very fragile, hence the title of today's show. I mean, it was just if this moved even a very little bit more, it would have been in the territory where analysts look at each other and go, okay, what broke? And in reality, guys like V and I look at it and say, okay, something broke. They just threw all the money they could at it to keep it from getting, to keep it within the the metrics of they can say it's not broken, but it's like, yeah, there's a good chance something did break. And it probably has been breaking for, several decades. So that said, we love to see this because I made a killing that day. For me, trading on a day like this was like shooting fish in a barrel. It's a very obvious bias where things are going. So you just trade your algo. If you have a nice algo, it will tell you exactly what to get. And that's what we do. So, we find opportunities like this, up, down, sideways, we make money. And you can find us over at algofactory.tech. V the Gorilla, can you get us over to the private live lab, please?
Yes. Guys, don't sit there and wonder if this is for you, that you might want to be, trying us out like you want to try out Rocky Road ice cream. There's no trying here in Algo Factory. There's only doing.
Okay, Yoda.
What? Why do you always mess up my flow, man?
It's because you love it.
You just take the wind out of my sail, bro.
I'm helping you, man. I'm helping you.
You're the worst. Anyway, look, listen. There's only try. There's no try. There's only do. Okay, there's only do over here. So you're gonna come over here and do us. I mean, do Algo Factory. Join us or die.
You would Peter Griffin on us. Come over here and do us. Do Algo Factory. All right. Stupid. Oh, what the hell?
Join us or die.
Just kidding. You're not going to die.